Hello traders, and welcome to another Monday video. This time we'll be focusing on the current events. We'll be focusing on actually S&P 500 hitting its circuit breaker for the first time I can remember for a long time. We're also going to be focusing on how do these circuit breakers trigger and when do they trigger? And of course, the VIX above 40 for the first real time since the GFC. So we have just witnessed possibly one of the biggest trading days. It is still not over since the GFC. Well, I think it already is the biggest trading day since the GFC, and it could get even bigger. So stay tuned and we'll get into the video right after this intro. Okay. All right, well, let's get started by talking about a few different things. So firstly, I just want to highlight where the S&P 500 currently is. So it's currently trading at 2821.1, or theoretically trading there. So this actually has hit a trigger event, and this trigger event was caused by the market falling from 2963.3 all the way down and then opening this morning and then closing at 2820. Now the CME have actually temporarily closed this market. Now, usually speaking, they should actually close it at 7%, but it seems that in a pre-market future, they're closing it at a 5% drop, and it's expected to only be a temporary issue, but we don't know how long it's going to be. So a circuit breaker is effectively a level or threshold which exchanges use to halt or close a market trade due to extreme declines. And these levels are calculated on a daily basis and are based on the difference between the previous day close and the new day, of course, movement. So in this case, it's a 5% movement. So generally we have three different breaches. We've got what's called a level 1 breach, was a 7% decline in the S&P 500. So if the market was open, if a 7% decline did happen, it would trigger a level 1 breach where trading would be halted for 15 minutes. So that is technically a level 1 breach. A level 2 breach would be at 13%. So you would see again another 15-minute break where the market would get, and it's basically there for liquidity. If you're not seeing enough liquidity or you're seeing an adverse news event, it kind of gives the market enough time to keep up with the fast momentum. And then there's the third one, and this is the one that actually halts the market trade for a day and prevents kind of 87 or previous flash crashes, and that's at 20%. So when that happens, if 20% was hit, and I really do hope that isn't hit because it's a little bit too extreme, to be honest, even if you are shorting, then the market will stop for the day. So there's three circuit breakers, and what we're seeing right now is not technically the same as what a real circuit breaker should be on the S&P 500. It seems to be that the CME are temporarily halting it because of the oil crisis going on between Russia and the Saudis, coupled with the coronavirus. So this is news that is coming out. It's definitely affecting the market. We've seen a massive plunge in oil, upwards of 30% on the barrel price of oil today. Absolutely phenomenal. We're seeing the VIX above 41. And what that tells me, and we will do videos on the VIX and on this channel moving forward, is basically you should be looking at scalps and day trades. We are looking at extreme price momentum. We are looking at previously the VIX has not been 41, 42, 43, this area since really the GFC. So we are looking at extreme volatility, which means extreme caution, stop losses, take profits, and of course, you should be looking at keeping your orders well maintained because news will be trading and changing time and time again over the next couple of days, and we really don't know what's going to happen with these volatile events. So please be tuned for VIX because it really is quite high. I want to just quickly point out what we're looking at here on the ASX 200. So to put it in perspective, the S&P 500 actually stopped trading probably around here. So when the ASX 200 was about 5,800 flat. Since then, it's continued trading, and you can see it's even further down. So this S&P 500 will be incredibly important to see what happens. But yes, the circuit breaker for today's futures is different to what the standard S&P 500 circuit breakers should be. We should have one at 7, one at 13, and the last one at 20, and they're there to protect the market from liquidity and news. And Really, that's what should be happening, but this has happened because of unforeseen news events. So very interesting. Stay safe out there, traders, and we'll see you next week on another Monday video. Remember to like, subscribe, and comment down below if you have any questions. We'd love to answer them. See you guys.